Well, meanwhile, amidst all of this economic uncertainty, one consistent winner has been gold. I've talked about this before. Obviously, Birch Gold is one of our big sponsors here at the Ben Shapiro Show. I, full disclosure, personally invest with Birch Gold. Phillip Patrick is a precious metal specialist and spokesman for Birch Gold Group. He joins us right now to discuss the status of the American dollar and where we are. Phillip, thanks for taking the time.
Thanks for having me, Ben.
So let's talk about the status of the dollar right now. There's been a significant amount of de-dollarization over the course of the last couple of months, but it's been going on for years at a time. First of all, why don't we talk about what that means? Why is the global reserve status for American currency important?
It's very important. It gives the US what's called exorbitant privilege, right? It's allowed cheap borrowing thanks to huge global demand for our dollars, massive control over global financial flows. In essence, the US has the veto power over any nation's ability to engage in international trade. It's allowed the federal government, of course, to run massive deficits without facing immediate collapse. So ultimately, I think it's made American capital markets dominate the globe and ultimately made us the wealthiest nation in history. So I think it's hard to overstate how important global reserve currency status is. It underpins our economic, diplomatic, and I think military power worldwide.
Okay, so let's talk about the status of the dollar, given the fact that there's a lot of economic uncertainty. We've been hearing rumors about an upcoming meeting of the so-called BRICS nations. That'd be Brazil, Russia, India, China, South Africa. They're meeting in Rio de Janeiro this summer. What is the goal?
Look, I think officially it's another working session between bureaucrats talking about economic cooperation. Unofficially, though, the BRICS leadership are expected to announce major advancements, essentially in a shadow financial system, a 21st century alternative to the existing dollar-denominated system. Inside sources are hinting now at a coordinated push to link the various systems that they've created over the last decade, things like mBridge and BRICS Pay and commodity settled trade, with the goal of making dollar-free international transactions possible at scale. Ultimately, I think it's a culmination of their ongoing project to reduce the dollar's monopoly as global reserve currency.
So, given the fact that there are all these nations aligning against the American dollar, that obviously means that you would expect that gold will be more in demand. I mean, there's an attempt by all these nations to find some sort of new global reserve. The Russian currency is not strong enough to withstand that. Neither is the Chinese currency. All these are subject to manipulation. And so you're seeing people rush for various safe havens. Gold, obviously, historically has been one of the big safe havens, maybe the key safe haven.
It's exactly correct. And we're seeing it. So US dollar holdings by central banks are at 30-year lows. Gold buying by central banks have hit records year on year for the last 3 years. And actually last year, officially, gold overtook the euro as the number 2 global reserve asset. And it's for the exact reason that you mentioned, right? Russia, China, countries like this, they want to de-dollarize. They want to take that non-kinetic weapon away from us, but they don't have a viable alternative. So they're using gold as a means to de-dollarize. The longer that happens, the more that gathers steam. Ultimately, the weaker the dollar becomes. So it's becoming problematic for sure.
All right. Well, that is Phillip Patrick, precious metal specialist and spokesman for Birch Gold Group. As you say, they're a sponsor on the show. If you wish to check them out and get involved, then you should actually check out Birch Gold Group. You can text my name, Ben, to 989898 to get started today. Phillip, thanks so much for the time.
Thank you.